Welcome to the Fear and Greed Weekend Edition, the week that was, a wrap of the biggest stories over the past 7 days. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Well, Sean, it was a big week for good COVID news, corporate carry-on, the climate change debate, and for Elon Musk. Have you enjoyed the week though, Sean?
I have. I live in a city that's coming out of lockdown, and I think everyone that's lived in Sydney this week has had a pretty good time.
Yeah, I think that's right. And it's worth mentioning before we get too far into today's episode that we've had a lot of listeners signing up this week to our free weekday newsletter. It's an email every morning at 6 a.m, completely free. Sign up at fearandgreed.com.au. Now let's kick things off, starting with equities today. And they seem to wobble early on in the week and then get a kick along towards the end of the week.
That, Michael, is actually a pretty good way to describe equities this week. We began worried about stagflation. It's a global phenomenon, low growth, high inflation, a real problem. Happened in the 1970s last time round. People are talking about it again. On the inflation side, we have all these supply chain problems. The ramping up of production post-COVID is taking time. Those things are putting pressure on prices. There's also fears about economic growth slowing. So that's why it had the wobbles early in the week. That's equity markets. But Wednesday, Thursday, UK and US earnings season kicked in and they started to look pretty good. Now, markets can handle some rises in prices if the economy is growing. And that's what seemed to happen towards the end of the week. So equity markets took off again, which is great. Now, back home, we always take our lead from Wall Street. So we did do that. But there's been some interesting moves as well this week, Michael. National Australia Bank replaced Westpac as the country's fourth largest company. It's the second largest bank behind Commonwealth Bank. National Australia Bank has outperformed Westpac substantially over the last 12 months, and so it took that position. 5 of the top 7 stocks are now banks. That's Commonwealth Bank, National Australia Bank, Westpac, ANZ, and Macquarie Group, which is the 7th largest company. CSL and BHP are the other 2. 10 of the 15 largest companies are either banks, those 5, or iron ore miners, BHP, Rio Tinto and Fortescue Metal. What it means is the index is very reliant on interest rates, because that affects banks, or iron ore prices. That means the top 15 companies lack diversity, and that's not so good.
No, certainly not. But the Aussie dollar had a better week this week. What's been happening there?
Well, it's gone from less than 73 US cents to more than 74 US cents. Mostly that's a commodity story. Whilst iron ore prices have come off, coal prices are really high, gas prices are really high, copper prices are really, really high. Copper's a particularly interesting one at the moment. It's close to record levels. Copper's a great conductor of electricity and it's very temperature resistant, and it's a future-proof commodity. Some really big deals in the copper industry this week. South32, a spin-off of BHP, it spent $2.8 billion buying 45% of a Chile copper mine. Newcrest Mining said it would be investing in new mines in Canada, Papua New Guinea and Australia, as much for the copper resources as the gold resources. And a few weeks back, Sandfire Resources doubled its copper holdings by buying a new mine. Copper is a really hot metal at the moment. And just before we leave the commodities, oil prices are still really high, Michael, and gold prices got a push this week, mostly because of that stagflation story.
Yeah, it's been a big, big week. It's also been a big week for COVID news, a bit of a mixed week. In some regards, it has been the best week since the latest outbreak started. Not so much, though, for Victoria, where numbers have peaked well above the 2,000 mark.
That's true, though the Premier, Daniel Andrews, is still talking about cutting restrictions some point next week. Victoria, within the next 7 days, should hit that 70% vaccination rate. New South Wales obviously ended restrictions back on Monday and announced more again yesterday, so there'll be further changes in a couple of days' time. Very exciting for people living in New South Wales. There are still decent numbers coming out of the ACT, unfortunately, though restrictions are easing. The rollout of vaccinations is strong. More than half of 12 to 15-year-olds have now been vaccinated. The big states are certainly getting there. The question, though, is what happens with Western Australia and Queensland in particular. How will they respond to reopening? When will they actually open up their borders? Will they wait till they get 80% vax rates or higher?
Yeah, and plenty of people are happy about those changes in New South Wales with the removal of hotel quarantine, or any quarantine really, for overseas travellers coming into the country as long as they've been vaccinated.
Yeah, I mean,
taking place in a few weeks.
Great news.
Yeah, indeed. Now, moving away from COVID now, looking at the Federal Treasury's review of the $90 billion JobKeeper program, it was a bit mixed. Found overall that it was well targeted, highly effective in maintaining employment and supporting the economy, but a couple of questions over some of the businesses that did receive the payments.
Yeah, it seems that about $13 billion of payments went to businesses that actually recorded increases in revenue. About the same amount went to companies whose turnovers didn't decline by the 30% cutoff mark or the 50% cutoff mark. There were a couple of versions of it. I think JobKeeper was a good thing at the end of the day. It got money into people's hands really, really quickly. So overall, I think it was a good thing. Though it was set up, there weren't checks and balances put in place in time. And as a result, the argument, of course, is that it wasted a lot of money.
Yeah, you're right. They seem to do it all in a big hurry. And of course, there's going to be some issues 18 months down the track. Still looking locally and in Victoria, it's been a bit of a murky week for Victorian politics.
Yes, Michael. Daniel Andrews has been under a lot of pressure this week. He said he didn't want to prejudice the inquiry, so he avoided the questions about it. He certainly lost a minister, the federal MP Anthony Byrne. He resigned under pressure as Deputy Chair of Parliament's top National Security Committee. That one's working its way through the system, but we're still going to hear a lot more about that in coming weeks.
Yeah, certainly will. Looking at economics, and this has been a big week for economics, and a bit of a spoiler alert, I was planning on choosing the economy for my story of the week, my biggest story of the week, but I think we're going to go off early on it. Business confidence rebounded. That was one of the highlights on Tuesday.
That's right, business confidence rebounded. Business conditions are still pretty weak, but what's important is what do businesses think will happen, and of course, what's going to happen is that the lockdowns are going to be eased and businesses are very confident of things coming back stronger than they were before. Recreation and personal services, retail, trade, construction, they all reported a big rise in sentiment. Now, that report came from National Australia Bank. That bank also said that New South Wales residents spent $100 million in retail outlets on Monday. That's the first day out of lockdown for that state, which isn't far off twice the level of the previous week. Plenty else going on, as you said. Josh Frydenberg, the Treasurer, was out saying that the September quarter would probably report a 3% contraction when the figures are due out next month. Westpac Melbourne Institute consumer confidence reading fell by 1.5%, but it still remains positive. Like business confidence, consumer sentiment is holding up much better than it did last year. The unemployment numbers were out as well. Now, the local economy lost 138,000 jobs last month, meaning nearly 300 positions have gone since lockdowns in New South Wales and Victoria. But because fewer people are looking for a job, the participation rate has fallen. The unemployment rate rose only to 4.6% last month from 4.5% in August.
And looking at corporate news, a few big stories in the corporate world this week. Can we start with the banks? Westpac, the country's second largest bank and fourth largest company, said its profit will take a $1.3 billion hit.
Yeah, there are a few parts to it, but one of them is that they're still spending on the fallout from the Royal Commission. Now, the Royal Commission handed down its findings 2.5 years ago. Westpac is still remediating some customers. How long will this go on for? I don't know. It's also downsizing its institutional banking operations, and so there was a big write-off for that. There's also money put aside for the sale of its insurance business, which it did earlier in the year. The write-downs weren't welcomed by investors and triggered a fall in Westpac's share price.
And speaking of banks, Sean, Commonwealth Bank held its AGM this week, as did a few other big companies.
Yeah, it was a big week for AGMs. Commonwealth Bank, as you said, CSL, Telstra, they all held AGMs, all virtually. Telstra has 1.3 million shareholders and so has to make its AGM available to all of those. Incredible logistical exercise. They all managed to get through the week pretty well.
Yeah, I don't know why. I just seem to enjoy AGMs. There always seems to be some good stories about it. At the very least, you get a bit of an insight into what companies are thinking and doing, but I find it probably a little too exciting.
Well, at the very least, you used to be able to get a scone and a cup of tea.
And now you just have to sit there at your desk and watch.
That's right. As a journalist, we always used to have to go to all these AGMs, and Telstra and Commonwealth Bank particularly were known for having AGMs that took like 4 hours. And you'd get all sorts of shareholders standing up discussing or asking a question about their local branch and why was their local branch not open for as long as it used to be. Oh my God, they were tedious. I actually liked the virtual AGMs.
Did certain ones provide better food than others?
Absolutely. And they had a reputation. Certain ones had a reputation for good food, and not just the quality, but the quantity. So some were a bit tight on how many scones they put out, Michael, but others you knew no matter what time you got there, you still get a good scone.
There'd be Sean Aylmer returning to his desk with pockets stuffed full, full of scones to get you through the next few hours.
It was dinner that night.
Yeah, well played. All right, let's have a look at international news. Big week as well for international news. Let's start with China. I think Chinese authorities have started inspecting the nation's financial regulators. This is bad news for anyone who's been doing the wrong thing in China, because the Central Commission for Discipline Inspection is coming for you.
Exactly. China has cracked down on a few sectors recently, and financial services seems to be the one in its sights now. Not just the regulators, but the big banks as well, the insurers, the debt managers. Beijing wants to stamp out corruption. The problem is that it just sends this signal to investors to be wary of investing anywhere in China, because Beijing really has a stranglehold on what goes on.
Yeah. Now looking at COVID cases in the US, some good news potentially there. The numbers have been falling, so maybe the worst is over.
Hope so. New cases are down more than 20% over the past 2 weeks, and as are hospitalisations. The pace of deaths has also slowed significantly. As a result, the US has reopened its borders with Mexico and Canada. Now, overall, there's been 44.5 million recorded cases of COVID-19 in the US since the beginning of the pandemic, easily the biggest number, and 714,000 deaths. Globally, Michael, there's nearly 240 million cases now and around 5 million deaths.
Sean, you mentioned this week that Brexit, the vote on Brexit was more than 5 years ago.
Incredible.
Where did that time go?
I know. More than 5 years. In fact, it was the summer of 2016. So it's 5.5 years ago. But of course, the divorce itself only kicked in at the beginning of last year because, as you probably remember, negotiations between the UK and EU went on and on about how it was to occur. A couple of prime ministers lost their job, and in the end, the UK ended up with Boris Johnson as a result of those negotiations. Now the UK, surprise, surprise, is demanding a rewrite of the Brexit deal as it covers trading arrangements with Northern Ireland. Now, that border between Northern Ireland and Southern Ireland was always one of the big sticking points, along with fishing rights between England and France. And no surprises that actually they're looking for change already.
Do you think it's one of those things that will just continue forever, that we will forever be discussing the latest developments with Brexit?
Possibly. My favourite Brexit story is still the one that Google put out, and I don't quite know the details, but 24 hours after the Brexit deal was agreed upon, the referendum was held and got through, within 24 hours, the third highest ranked question on Google was, what is Brexit?
Oh, really?
That's a true story.
That is fantastic. And a worry as well at the same time.
Yeah.
And finally, one more international story. Singapore tightened monetary policy this week, joining New Zealand, South Korea and Norway.
There certainly is a push to tighten monetary policy. The US is likely to start doing something later this year. Europe will follow suit next year. Australia is lagging just a little bit in that respect, and our Reserve Bank certainly won't do anything on interest rates for a while, though it probably will reduce bond purchases some point next year. The trend is happening. Ultra-loose monetary policy is over.
All right, we'll be back with more in a moment. And now, Sean, we get to the point in the program where we go through the biggest story of the week, the sleeper story, the most remarkable story, and our favourite story. And over the past few weeks, we have tended to agree more than we disagree.
Well, already we're disagreeing because you've told us your biggest story was the economy, and I disagree on that, Michael.
Oh, but it's hard to go past it, really, because there was a new development every day, and big developments when you think about the labour force data being released on Thursday and business confidence, and then Josh Frydenberg out there talking about economic growth, or rather the lack of it, in the last quarter.
Yes.
I'm going to say it's pretty hard to beat, but what have you got?
Well, I reckon climate change this week beat economics in terms of relevance. So we had the Reserve Bank out saying that the government and society needs to do something or else suffer consequences. They talked about the coal industry being decimated. They're talking about changes for lending for houses. Guy Debelle, the Deputy Governor, was very forceful on his views on climate change. That was significant. We had the National Party and the Liberal Party at odds on finding a pathway forward to create a zero emissions target for the government. Now, the United Nations Summit on climate change is being held in 2 weeks, and the coalition really needs a policy to take to that before then. Andrew Forrest, Fortescue Metals man, very big fan of green hydrogen, was out. He said the Nats was scaremongering, and he told the PM he should go to Glasgow. And I love the fact that Prince Charles was surprised that Scott Morrison may not be going to Glasgow. The PM then announced on Friday that he would be attending the conference. I think, putting it all together, it is the biggest story of the week.
You know what? I didn't agree with you until you got to the end, but because you've invoked royalty there at the end, it might just edge it in front of the economy just a little bit. So, okay, I'll give you that one. The sleeper story of the week. What have you got?
Well, I think it's about the Star Group. This story got swamped a bit. It came out on Sunday through Nine Media. Claims of suspected money laundering, organised crime, large-scale fraud, foreign interference at the Star Casino Group. The author of that is a guy called Nick McKenzie, who has an incredible track record of breaking really big stories. Given what we saw with Crown, there's got to be a state investigation into the Star as well. It's particularly poor that the Star board apparently didn't act on 2018 confidential reports from KPMG, which detailed faulty anti-money laundering and counter-terrorism financial procedures. If the board knew and didn't do anything about it, that's a real problem. It's a bad look for the Star. It's a bad look for the sector. There's so much backlash around sports betting at the moment. I just think the next little bit is going to be a tough period for gaming and the gaming sector, and I think we're going to see regulatory changes in the next few years.
Yeah, that is a good one. It's a very good sleeper story. Mine is, I don't agree with you, that is the sleeper story of the week, but mine is a bit of an odd one because it is a big international story, and I'm only saying it's a sleeper because it was a big development this week that didn't seem to get as much attention as it should have, and it was one that you mentioned on Monday, and it was the big global overhaul of taxation.
Ah, yes.
And the fact that there's basically been a deal struck, and that the sticking point here was Ireland, because Ireland has been a low taxing jurisdiction. So a lot of multinational corporations have had their headquarters or essentially their taxation has been done through Ireland at this low tax rate. Ireland has now agreed to a 15% tax rate. So essentially it sets the base. There had been proposals for a 21% rate and other things, but at least it's lifted it up a little bit. I think it's a sleeper story because it didn't get the coverage I think it should have because of that major development, and because corporate tax avoidance is such a big story. I mean, the numbers, it apparently costs somewhere in the vicinity of $240 billion US a year around the world. So in terms of impact, surely this one has to be the sleeper story of the week.
Yeah, okay. I think you might be right. So I'll give you that one. Now let's go on to the most remarkable story. What's your most remarkable story? And we'll see if we can agree on this one.
I don't think we will because mine was a very small story, and it is about a company that we have actually spoken to on Fear and Greed before called EnviroSuite. And we like stories of Australian companies doing well on the world stage. And this is a cracker because on Wednesday morning, EnviroSuite announced to the ASX that they had done a deal with NASA to manage noise monitoring and noise pollution for supersonic flights. Look, I love planes. I love anything to do with NASA and space and supersonic travel. And the fact that an Australian company is in the middle of this, a small Australian company has secured this contract with NASA, I think that is a remarkable story.
That's fair, but we're going to disagree, and I think it's okay to disagree on this one. I think the most remarkable story was all about boys and their toys, specifically Elon Musk and Jeff Bezos, the first and second richest people in the country. Elon Musk tweeted a silver medal emoji to Jeff Bezos because he's worth more than him. Mind you, I thought Bezos got one over him this week by sending the 90-year-old William Shatner of Star Trek fame into space. And Mr. Musk also suffered because he had to cut the price of his $50 million Californian mansion this week. So I think it's quite remarkable how these incredibly rich people are behaving poorly.
Okay, that is pretty remarkable just because of the scale. You know what, though? I'm sticking with EnviroSuite.
Okay.
So we're not going to agree on that one. Last, we have our favourite story. What's your favourite story of the week?
Well, this is a bit parochial. No one really wants coal prices as high as they are, but I love the fact that China let in vessels from Australia holding Australian coal that have been moored off the coastline for more than a year. Remember, China banned Australian exports of coal, and I think in part just because prices are so high, it let a few ships come in this week. Now, there's no economic reason why Beijing put a ban on Australian coal, and now they're paying the price for it. Totally parochial, but it's my favourite story of the week.
Yeah, it's a good one, but I have the winner here. Pump and dump schemes. We've spoken about this before and it came up early in the week. This is where essentially investors push a stock hard and then as the price rises, they sell out, make a profit, but essentially just leave everyone else with potentially overpriced stock. The way that a lot of these are done, they're coordinated through chat rooms and messaging apps. And this week, the Australian Securities and Investments Commission actually joined one of those chat rooms and told traders that they might be breaking the law. And no one actually believed that it was in fact ASIC in the chat room. And so by the sounds of it, most of them just ignored the warning. It's probably a fairly expensive warning to avoid because if they are in fact busted for it, there are fines of up to $1 million. There's jail time here. But I just love the fact that ASIC jumped into one of these chat rooms and thought, you know what, we'll warn them directly where they're discussing it.
Could you imagine being a trader and realising 2 or 3 hours later that it was actually ASIC that put that note out?
Yep, just that feeling, that sick feeling in the pit of the stomach, wouldn't it be? But
Totally.
To be fair, they have to be pretty dumb to go ahead with it anyway because the message even declared that it was from ASIC. And so if you weren't going to just go, oh, maybe this isn't such a good idea, then you probably deserve what's coming to you.
But these chat rooms, you can't believe anything you read anyway, Michael.
This is true. Very true, Sean. Now, moving on to this week's interviews, some really good interviews this week.
Yeah, we did.
Monday, we spoke to Kate Howitt. So Kate manages the Fidelity Australian Opportunities Fund. She's one of the top 30 female fund managers in the world. It was a really interesting chat.
It was. At its basis, she talked us through how she valued companies and how to think about markets. Really, really interesting if you're an investor.
Yeah. Tuesday, he spoke to James Wagg from Quartermentha.
Yeah, that was all about insolvencies and whether we expect to see a big jump in insolvencies as government subsidies are drawn back. Not unlike 12 months ago, there's plenty of uncertainty in that sector.
Wednesday was a bit of a milestone for us. Our first ever guest joining us from Finland with Johanna Smoros from Relex, the supply chain company.
Yes, supply chains are such a critical part of the economic puzzle going forward. It's why we're seeing inflationary pressures and things like that coming through. Johanna had a really interesting take on it.
Thursday, Ben Willey from Spinach Advertising Agency, one of the Fear and Greed regulars.
He loves his ads and he loves his data. So therefore, Ben talked about the ad spend that's going on, really good for digital properties, pretty good for broadcast TV, not so much for print.
And finally, yesterday, you had a chat to Alan Oster, the NAB chief economist.
A man who can put economics into English. You always love that.
Yeah, that's right. Now, if you want to listen to any of those interviews or, in fact, any of the shows over the past week, they are all available on your favourite podcast platform or at fearandgreed.com.au, which is also where you can sign up for the Fear and Greed daily newsletter. Thank you very much, Sean.
Thanks, Michael. Have a great day.
Don't forget, tomorrow, Sean and I will be back with Adam Lang from the Fear and Greed team to have a bit of a lighter look at some of the news around the place. I'm Michael Thompson. Have a good Saturday and a great weekend.